So we're going to come in and quickly show how we might come through and potentially model in selling some assets down. So coming back to this particular base scenario here where I've come through and I've modeled in a couple of dummy purchases plus the existing portfolio, what we can come in and do is we can come into our manually entered spends tab. And then what we can do is we can see here are the acquisitions that I've previously modeled in. We can then come through and use our selling column. So we might come through and in this video actually model in selling in a couple of different instances. So maybe we can come through and we can have a look at that existing property that we had in the portfolio there at Highfield Street here. Here it is. And the platform will give us, based on its historical compounding growth rate, what we might be able to sell that asset for, depending on the year, and what weekly rent we're going to forego if we were to lose that asset. Now, we know that this property here had been growing at around 1% compounding. We'd held the property for multiple years. So we actually come in and model in selling that acquisition down. We come in, we select the property that we want to purchase, we tick that next to it, and the platform will actually sell that property down. And the good thing here is we can sell existing assets in the portfolio or future forecasted ones, because here we've modeled in a 2025 acquisition. The platform's asking us, do we want to sell the property? Basically, we sell it what we paid for it, but in this instance, we're going to sell Highfield Street. So we've sold that property purchase. We'll obviously get a little bit of a kick there in terms of cash in offset, because there was a little bit of equity there in that portfolio. So now we get a nice little bump up here in the offset account. Again, part of our assumptions here are CGT related. So we've got a couple of CGT assumptions. So we'll claim our 1 year 50% discount and we'll be paying it at this CGT rate here of 45%, which is customizable, may I add. And then we get the proceeds given to us here in our offset account. If we just turn on our little more info, less info field, we'll be able to come through and see what that looks like from a property profit perspective. So we're just going to turn that more info, less info on, and then we can come in and see what that sold property profit is. That second tab there, we can see our sold property profit in this instance was 188,200. And there's lots of other information that we can see there when we toggle more info, less info on. Sometimes it can be a little bit aggressive in terms of data in the client's face. So it can be a lot for the client to comprehend there when they're seeing all of that information given to them on this offset and annual spends chart. Also from the passive income chart when we're filtering in more info, less info. So I'll do a separate video on that in a second and where that can come into play. But for this particular demonstration, we'll just come in and put that info back on. Just wanted to show what the profits would be by selling that particular asset. Then what we've done is we've bought another property purchase through here, and then we can also come in and then go, okay, if we were to hold these properties for a certain period and then come in and potentially sell them down at a certain point, let's say we held them for, I don't know, say a couple of market cycles, for example, or we held it for 15 years. So we can come in here and we can open up our selling column, and then we can actually model in selling any of the assets in the portfolio. So we can come in and we can sell this particular property down in 1 year and then maybe split the sales out and sell one in another year to potentially minimize the amount of CGT that we would have to pay. So we can come in and we can sell a couple of those acquisitions down. So we've now sold 3 of the 5 assets that we held in the portfolio, because remember we sold Highfield plus now the 2025 and 2027 purchase. We sold them out in through here. We can then come through and have a look to see how much cash we would have in 2041 after we've triggered the second sale. We can find that here in our equity positions chart. So we can come through to the year in which we've effected that second sale. So we can see that's indicated by really spike up here in the green, which is our savings through here. And we can see there that our total savings is sitting at around $2.5 million there. I'm looking from the third line from the bottom. In 2041 after we've effected that sale. So maybe, for example, we could come through, and this is another really common strategy that we see. We come through and we then turn that into potentially maybe a high yielding commercial asset. Now we had 2.5 million there sitting in cash, so we could potentially come through and make this a high yielding commercial asset and maybe even go no LVR. We can put a cash deposit down on that particular asset. We can play with the rental yield, for example, maybe it's a 6.5% net yield with no debt against the property. and we plug that in, and then we can see the difference that that adds to the portfolio from a cash flow perspective as we're getting closer to that desired retirement year there. And you'll see that demonstrated really nice in your passive income chart, where things take a really big spike up once you've done that sell down reinvestment approach. So that's how we would model in selling acquisitions. Typically where we see clients do that is in the early phase, in terms of they've already got a property that they don't really like, or they've already considered selling down. So you could model in selling that sooner, or you might model in selling an acquisition that you're intending on purchasing for a client in the next couple of years. So we kind of let that grow and then sell and then reinvest that. Or the other really common one that we would see is when the client's talking about selling to upsize or downsize the owner occupier, all using that same functionality there of sell in our manually enter spends tab. But in this particular visual here, we can see the passive income there was increasing, dipped away as we sold a couple of assets, and then as soon as we converted that into a cash flow play, we're now generating a really strong amount of passive income. So that's how we do our sell down functionality. Now, again, we might really like this particular scenario, so we can come in and call this sell two into one yielding property, for example, hit save, and then that too will appear in our little drop down list of scenarios.